Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about 5 companies that could make you 1 crore rupees in the years to come. So these are multi-bagger picks on my behalf. It has been a month or so since I brought this forward. So let's understand which are these 5 companies which I believe can become 5-6x from here and what you need to do in those. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about these 5 companies, as a small request, that kindly support me on Patreon. Once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 Patreon membership, you'll have access to my portfolio, my watch list, and also you can ask me questions daily. One query will be answered and would be immediate. So I'm online on that on all times, so you can ask me questions there. Come to Patreon. If you have queries with regard to specific stocks, a number of stocks, say 10, 20, 30 stocks and all, you can send me an email and we can work things out in that manner. Okay, so this is the criteria of investing into these 5 companies. These are established brands and strong management, diversified yet market leaders in its own space, low or no debt without any pledging. No pledging is there in these companies. Strong holding of institution and promoter, and solid ratios and numbers are the criteria that I have chosen for picking up these companies. So how to go about in the allocation framework? So put 4 lakhs in each of these stocks. So if you have less money, you can rationalize with that amount. So if you have 1 lakh rupees in total, you can put in probably in that manner. So 20 or 25% in that manner, 20,000 each in each company, each of these 5 companies, and you will get a good return. A CAGR of 25-30% should be there, but always keep a 30% stop loss in these companies whenever you end up buying into it. These are risky bets. I'm not saying these are not. Management quality is pretty good at the moment, as far as I have researched, but you can do even better job. So take your own call and do the research. So there are risks involved in all these small cap companies, but there are very good rewards awaiting if things really go right from here. So a CAGR of 25-30% expected, but you can expect a drawdown of 30% as well. And take allocation as percentage wise. So basically you need to put in 20% of your total amount in each stock. So if you're putting in 1 lakh rupees, you put in 20,000 each, and you can calculate your returns at 25 to 26% CAGR. So the first pick in these 5 is Frontier Springs. They are the leader in hot coil springs for trains and vehicles, or that locomotive vehicles. And basically they are the manufacturers of springs and roof sheets for trains, and a very interesting company at that. Very good profit growth. They have just come out with their numbers yesterday, or I think a couple of days back, and the numbers have been pretty robust, around 30% profit growth. Sales have dipped, and that tells you that the margins have been pretty good. So I'll make a separate video on Frontier Springs going forward, but it can be bought. The market cap of the company is only about 100 crores. The kind of business that they are into, they're getting government orders from the IRCTC, from the railways, Indian Railways, and they're getting a good amount of orders at that. And right now the stock is depressed because of the kind of situation that we are going through, and there are very less or no trains running, and so the business is not that great at the moment. So these are the opportunities that one has to take advantage of going forward. So if you hold for 3 4 5 years, this can be pretty big, since the market cap is extremely low for such kind of a business, at around 100 crores, at 250 to 60 rupees. It has also announced a dividend of 1.2 rupees. Continuous profit growth it has shown over the last 2 3 years, over the last 8 to 10 quarters. And they also make forging items apart from the coils and all the rooftops that I'm talking about. So it's not that they are only makers of spring coils for railways. So this can be bought with a caveat that it is a micro cap in nature, so there is a risk involved in that, but this can easily become 500-600 crores going forward. Next in line, and this is one stock that I've talked about a lot over the last 6-8 months, and this is KILPEST India. This is into agrochemical and diagnostic business. Its subsidiary 3B Black Bio is into testing kits, providing testing kits or diagnostic kits, you can say, for a number of, you can say, a number of illnesses. So it's not just that they got the COVID-19 approval just now, or the approval that recently got, but they were exporting malaria testing kits and other kinds of pneumonia etc testing kits as well. They have got the big thing that has happened recently is that they have got approval from ICMR. Not only ICMR here in India, but US FDA approval has come through for the current pandemic, and they are on in line to get more approvals going forward. So this looks like a sustainable kind of a growth that Kilpest can show over the next few years. Stock is still below the 2018 levels. The high in 2018 that it touched was 180. Currently, the stock price is 169, 170. It has come out with the numbers just on Friday evening, and the numbers have been robust. A 50% you can say profit growth. Sales grew by 20 odd percent and profit grew by 50%. The margin is just astonishing at around 70 odd percent. The net profit margins is at around 30%. The EBITDA growth, sorry, has been over 70%. So the company has produced very strong numbers, an yearly dividend of 70 paise, and the market cap of the company is still at around 150 crores. And that is why I like the company, that it is still 150 crores. It has doubled from the levels when I first introduced that company. I still believe that the company can be 800 to 1000 crores going forward. So this can be bought as well. The next in line, or the next company that I want to talk to you about, is Amber Enterprises. I have talked about Dixon a lot, and I like Dixon more than Amber. There's no question about it. But the valuations in Amber Enterprises is pretty reasonable compared to Dixon at the moment. Dixon Technology is trading at around 60 times current earnings. Amber is trading at around 40 times, and it is a market leader in AC manufacturing. So they get contracts for manufacturing ACs, have a contract manufacturing from a number of brands in the AC segments. The clients include companies not only in the AC segment but also in refrigeration and automotives. So they have diversified into other systems as well. All AC firms is under its ambit, and you can understand that the AC penetration here in India is pretty low, and my next pick is the pure AC play as well. But this company also caters to automotives, also caters to companies in refrigeration, and there are refrigerator companies which are running around, which are pretty big in nature, and with electrification going on across India, and it is going to get better. Even this refrigeration system is going to get better, and also with automobile sales and better automotive sale, we will see all three of its cylinders working really well. The market cap of the company is only 5000 crores, trading at only about 38-40 times earnings. This can easily be bought, and one can look for very good returns going forward. So Amber Enterprises can be bought at current levels and on declines to 1300, 1350. Remember all these picks that I'm talking about, and I didn't mention this earlier, they have run up over the last month and a half. So wait for a slight amount of decline and then get into it. Probably in August and September we will see a decline in the market, maybe not sharp, but maybe 5 6 8% decline, and that is when you need to just grab these companies and just hold it for a longer period of time. So after Amber Enterprises, another company which is a client of Amber, but it produces other products as well. So Hitachi Home is my pick. I have already talked about Blue Star as one of the multi-bagger picks earlier, probably 6-8 months back. That is also good, but Hitachi is in a different league of its own. It is in the premium segment, a leader in the AC and home appliances segment. They have better, you can say, AC split ACs that they produce. Blue Star is famous for corporate ACs and more or less famous for, you can say, window ACs as well, and a number of brands at that. They are more consumer friendly in the regards that they are not that premium compared to Hitachi. Hitachi is more premium in nature, more silent AC that they produce, so the margins are better in Hitachi. You can buy both even, but as far as Hitachi is concerned, it has been growing in market share for air purifiers, refrigerators, network systems, as well as chillers. So not only ACs, Hitachi is big on other segments as well, and they produce office improvement products, and they sell it to all across in India and also abroad. Have a number of range of AC selling at higher margin. So it's not that they produce just 4 or 5 types of air conditioners, but there are at least a dozen and a half, so at least 15 to 20 types of air conditioners that Hitachi is selling at the moment. As I mentioned with the Amber Enterprises as well, AC penetration in India is at very low levels, and it is bound to get even better going forward. Currently, due to the pandemic situation, we have seen that the selling of such white goods products have been extremely low, probably lowest in the last 4 or 5 years. So this is the time to add these companies. This is the time to get into it on declines again. So probably a decline of 5 to 10% from these levels, 10-12% would be a better level to get into. Remember, electrification and urbanization will further boost the demand, and this is more a company that is extremely, you can say, popular in the higher urban class and in the urban areas. The market cap of the company is around, it's not 1,000 crores, but it is around 5-6 thousand crore, not more than that, 6 to 8 thousand crores, not 1,000 crores but 6 to 8 thousand crores, and which is not that huge when you consider the size of the business that Hitachi has. Next in pick, and the fifth one here, is Hester Bio, and this is Hester Biosciences, the market leader in animal and poultry vaccination, and this is the only company that is listed in animal vaccination, etc. We are talking of you can say human vaccination and everything else. This company has been producing very high return ratios and very good numbers over the past at least 10-12 quarters that I am watching, and the stock has been steadily going up. Currently the market cap of the company is around 1100 crores or so. Still, I would say it is a very small cap company for the business that it is doing. It is also into poultry vaccination, which it was not before. It has a high level of export, so 30% market share in India, exports to most of the parts of Europe, some countries in Africa, and in Uzbekistan, Turkmenistan, etc., and parts of Central Asia as well as East Asia. South Korea is also a place where they do it, and some places near that as well. So it's spread across the globe, and it is a global player in this space, and the only player that is listed, and that's why this one comes to my mind. High promoter institutional holding is there, and the market cap of the company is only 1100 crores. So one can look at Hester Biosciences on declines again. I think it is around 1200 rupees or so. Any declines towards 1050 rupees, major declines in the market, you can get into this stock for a 4 or 5 year time frame. So this was a video on some of the stocks which could become multi-baggers going forward. Kindly like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.